This is Joe Steckler, folks, your host for Helping Seniors. Helping Seniors is a radio show that is designed to inform, to educate, and connect seniors and those that care for seniors with resources to help them live, well, in many cases, just simply live. I've been on the phone as the education specialist since late November, and I can tell you that many of the stories that I receive are simply heartbreaking. Many of the problems, we can help people get directed to the correct resource to resolve the problem. Some we can't. And the ones that we can't, most often come about as a result of poor planning. And I say that with tongue in cheek because there are some people that try as they might, don't earn enough to make the plans they need to age with dignity and with an ability to live. And I'm believing that more and more is going to become necessary for the seminars that elder law specialists and other attorneys give on the subject of estate planning. They're going to have to become more than just something for a select few. Because if we don't understand at all levels what we're going to need to try to do, we're going to become left behind. And I can assure you that becoming left behind is 70, 75, 80, 85, and 90 is no fun. And I can say that because of the calls that I've received from people in their late 80s, early 90s, mostly women that are trying very hard to make ends meet, and simply for a number of reasons, they have a hard time doing it. And over the next 3 or 4 months, I'm going to try to devote the radio shows to helping people understand some of the things they can do early on in life to do a better job of planning for the future, and to caution people to understand that you've all heard the saying, there is no free lunch. Simply free assets, free money, free sources, free this, free that. While we talk about it, we'd like to know more about it. It does not exist. It is just something that doesn't happen. And before I get into the show, I'll tell you my panelist is, I'm going to introduce her because she's going to listen to this. Is Barbara McIntyre, and Barbara is with she's a certified home reverse mortgage specialist, and she works for reverse mortgage funding. It's one of the top reverse mortgage lending funders in the United States, and this is what we're going to talk about. Welcome, Barbara.
Well, thanks. It's my pleasure to be here, Joe. Thanks for having me.
Okay, I want to make sure you get that mic turned on. You turn directly into that mic, and not. I know what you're going to say. No, I don't know what you're going to say. That's why I'm asking you the questions.
I'm glad that I'm here.
Thank you. I like bringing the information to the community.
Well, I like having you on the show because what we are going to talk about in just a minute is something that more people need to know about, because it's becoming something that I receive more and more calls about on people needing help. But I just want to talk just for a second, folks, and I want you to put aside the fact whether you're an independent, a Democrat, a Republican, or whatever you are. But I read an excerpt from the National Association of Elder Law Attorneys this morning before I came to the show. And what Bernie Sanders is going to make a part of his platform for running for president is free long-term care for everyone. Free long-term care for everyone. And let me give you just a little perspective on what that could mean to every citizen in the United States. 6 or 7 years ago, there were 120 plus companies in the United States that sold long-term health care insurance, tied up in annuities, tied up in other different policies. I bought policies from my wife and I roughly 15 years ago, and those two policies cost me together a little over $5,000 a year for long-term care. Now, think about this. Last year they did an analysis of how many long-term care companies were in existence, and I think they were either 10 or 12. So over a 10-year period, we declined from 120 plus to 10 plus. Why did they decline, folks? They declined because they weren't making money. It can't pay for it. You can't do that. So as you think about how you're going to vote, start listening to what the people are going to say to you about what they're going to give to you as the President of the United States. If all of us got long-term health care free, where do you think the cost of paying for that would come? We could take and reduce the current budget, which is not adequate to cover our military costs, our living costs, our social programs we have. In fact, now we are getting behind even with what we're doing now. Add to that a program that insurance companies have not been able to make successful over the years. Who's going to pay for that? It's going to be you and me. And what's going to be paid for is through increased taxes. It doesn't matter whether you live in a state that does not have an income tax or not. These are going to be federal taxes. So you're going to pay them whether you want to or not. I'm not saying it's good or bad. I'm not telling you. I'm trying to tell you that you need to pay attention to what all the candidates are going to say, what their platforms really mean, and what the ultimate cost of what they plan for the United States of America is going to mean, and whether the United States of America can pay for it or not. You know, everybody has a breaking point. The United States has a breaking point too, contrary to what everybody might think. Well, enough of that. But I wanted you to know about this because it is something to think about, and it's something that we need to be better informed about. It points out that people like me can get stuff on a network, and it's my job to do the very best I can to get that information to you. And you're going to be surprised at what we're going to talk about on the second half of the show this morning, because there is a program that's been in effect a long time to help people to get in trouble with reverse mortgages. And I'm not going to talk about that until you listen to Barbara talk about reverse mortgages, what they are, what they mean, what we really truly can do and what we can't do. Because there's always hope if we do things the right way.
Right.
And having said that...
I want to jump in here, Joe, and say to you that, when you first started the show, what you said was that we need to be prepared and we need to start thinking earlier on about what our retirement, our future will look like. That when the women that call in that have, because women usually do live longer than men, right. So they usually are the ones that in their 80s find themselves not having quite enough and struggling. So being prepared and thinking way ahead of time when you're in your 60s and moving into retirement, in your 70s, starting to plan for what your retirement's going to look like, perhaps will help you end up in a much better position when you are much older. Things like, and I agree, I didn't hear what Bernie Sanders said about his promise, but pretty lofty idea and seems a little unlikely that that's going to come to fruition. So what people do need to think about is if I'm not going to be given free long-term health care, where's it going to come from? And amazingly, on a long list of what reverse mortgage funds, which is really just access to your own asset, your house, tapping into money in your own home, one of the things that people use those funds for is either to continue to pay the premium that you already said, $5,000 a year. That's reasonable for 2 long-term healthcare policies. It can be much more expensive than that.
Oh, yeah.
Or just the care itself when you get to that point. If you don't have a long-term health care policy, then you want to age in your home, then you're going to need funds to be able to do that. So that's another resource. The reverse mortgage gives someone another resource for those funds. So planning is the whole key. What we're starting to see now, and just to kind of back up a minute, for those that don't know, though I think there's been so much conversation about reverse mortgages, people generally know by now, it is a mortgage designed for people 62 years and older that allows them to tap into equity in their home. If they have a mortgage or other debt that they want to pay off, the reverse mortgage helps them pay off that debt so that they now have reduced or eliminated monthly payments that they're having to make. So for some people, paying off that debt alleviates the stress on a small budget. For other people that may not have a mortgage or other debt, they now have just a resource of funds from their home that they can pay for long-term health care insurance, or they can do home remodeling to make their house better suited to their needs as they age, like grab bars and ramps and things that they might need so they can age in place. There's just a very long list of what people can do using those funds.
What a lot of people think about, Barbara, when they talk about, and I think this is, and I would like for you to expand on this a little bit. The calls I get and what I've heard, and you didn't mention it, but it was in the reading I did. One of the things they say about a reverse mortgage is that you can do it to pay off debt. You can use it to pay for things like long-term health care. You can use it to pay for things you want to do. But there's too much, I think, made of you can use the money you take from a long-term, from a Heckham, not a Hickham, but a Heckham. From the Heckham, you can take that, and you can go on vacations, or you can buy a better car, or you can do this. And I think this is where many people get in trouble. When they take that money from their home and they spend it, they want to have a good time. They want to go to Disney, and look at what the costs are to go to Disney now. Think about it. I get so many people that call me for help. And once I figure out what their social, and most of them, folks, most of the single women in their 80s and early 90s are living on Social Security alone because they've used up the assets that they had.
You're right.
And they're down to Social Security. I had one woman that has lived in her home for 30 years. Her Social Security is $960 a month, and that's in her entire revenue. And she is paying, and has been paying, something like $770 or something like that dollars for her house. She still has a mortgage, so she's the delta between $770 and $960 or whatever it is. It's pretty close to right around $195. I figured it out.
Which that doesn't leave her any money to buy her food and to buy medicine.
She has been living on $100.
It's amazing what people can do, and I see it all the time, Joe.
I know it, and here's how she did it. She got food stamps, roughly $108 a month. She wasn't able to do anything, and she was one of the very, very fortunate people that qualified for the Medicaid type insurance thing that gave her a policy that cost her absolutely nothing, and it covers every medical cost conceivable. covers her medications and everything. And that's the only way that a woman has been able to exist, because that delta of $197 has paid for her food, it's paid for her clothing, it's paid for house repairs, it's paid for. She's not complaining. The woman, I was amazed. The woman, she's the reason she called me was, she called me to see if there was any other kind of help available, and we were able to find a couple of things that helped her. But
if she owned her home, then that's what I would describe and call a needs-based loan. Here is a woman who has a home. She has a mortgage, but for that mortgage payment, I doubt it was very big mortgage, but it still required that payment or she would be foreclosed on.
Right.
And if the reverse mortgage could be used to pay off that mortgage and give her access to other funds, I would bet that she wouldn't use it to go to Disney. She would use it to live. And I really say, for most people, they do not use the asset, the money coming from their home asset, and squander it. Now, that might not have been true 10, 15 years ago when home values were really, really high. Before we had the real downturn in real estate, we did see people drawing out large amounts, all of it actually, and then probably not planning for the future. We don't see that so much anymore, because the education around the program and the fact that it's designed for use moving forward in retirement is a really big part of educating borrowers on practical uses of the reverse mortgage today.
I agree. I fully agree with you on based on what I've heard. But the thing that I've been very, very reluctant, and I have sent several people to you, because I trust what you would tell them, but I would be very careful. And I am very careful, and every time I recommend somebody talk to somebody else, because I don't send to somebody I just pull out a phone book. I have to know the person that I send the person that has a problem. I have to know myself what kind of a person they are or something, and so that requires me to do a lot of research.
Absolutely, and that's what your organization, this organization that we're a part of, is why it's so important to Brevard County, because it really is a network of fully vetted, honest providers that it's not their self-interest. It's really about supporting the people moving into retirement and retired in Brevard County. It's an invaluable service, and we're glad you have it.
I'm glad you mentioned that, because originally I had a sponsor come to me and say, I want to cancel my sponsorship. And I said, why? And they said, well, I haven't had anybody come in and say that we came in as a result of using your service. And I said, how can you prove that?
Right.
I said, you read the articles, you read the things that we do, the magazines, we put interest articles in, the amount of what's gone on the radio, the television shows. It's all education.
Right.
And I said, somebody's got to do this. And
right.
I said, you ought to be ashamed of yourself, because you are in the people care business. And you are one of our smallest contributors, and you should feel privileged to be able to help an organization that I'm certain does provide information that would let you know that you're part of our network.
Right,
and
I agree completely.
I got pretty. Actually, Barbara, I don't get mad too often, but. When an organization that does, and the reason I brought that up is because of what you said. We're not in this to help to advertise for businesses simply to make money. But if I find 4 or 5 people or anybody that's ever going to ask about a HECM or something, I'm going to recommend they come to you, because I know you. I know I've had you on the radio show. I've had you on a television show. I know what you're going to say. And I know
it's not about making a sale. It's about educating a consumer.
Right.
And
But if you get a sale out of it, that's fine.
Well, of course, but sometimes it's not right for someone. So,
yeah.
You asked me once before, who wouldn't?
I was just going to ask you, who wouldn't be a good candidate for a HECM?
Somebody that already knows that within a year or two, a short period of time, plans to leave their home, either to move in with one of their children or is planning to go to assisted living. That's their long-term plan, is to sell their primary residence and move into assisted living. They shouldn't consider a reverse mortgage. It's an expensive loan because it's FHA insured, and that adds a large cost to the loan. And if you're not going to live in the property for many years, less than 2 years, 3 years, you just shouldn't spend that kind of closing costs on a short-term loan. It's not a short-term loan.
Well, you brought up something. When I read this about a HECM and getting out of trouble on a HECM, you have to live in the house. To
keep the reverse mortgage, or HECM, home equity conversion mortgage, reverse is its nickname. To keep that mortgage in place, then you do have to live in your home as your primary residence. And you have to pay your property taxes, and you have to pay your homeowner's insurance. If you don't continue to live in your home, for example, by moving into an assisted living facility or deciding that you're going to go live with your kids, then that is a maturity event, and the loan becomes due and payable. So that's where I say you really have to sit with a potential borrower who's looking into investigating if this mortgage fits their plan, fits their financial plan. And one of my very first questions is, where do you see yourself living in 2 or 3 years? If they say, well, I heard the Fountains is a great place, or Brevity is one of the best places in the county, then no reverse mortgage for you. It doesn't make sense.
Okay, you mentioned something about how people could get in trouble, and you said paying their property taxes and paying their
insurance, homeowner's insurance. That is one of the changes that's occurred over the last few years. Remember, we spoke briefly about years ago people taking all the funds out and maybe being impractical on how they spent the money. They took trips. They just gave it way too much to their children, and they weren't fiscally responsible. So they ran out of money. So what happened was, when it came time to pay taxes and insurance, they ran short of funds. But they'd spent their reverse mortgage benefit. So where was the money going to come from? Well, the lender, all the lenders that do reverse mortgages, they can only be paid back by the value of the house. When a borrower leaves a property and they're going to settle up with the lender, because that's when the loan is typically due and payable, is when they've left, the house is the asset that's going to be looked at. The house has to be what pays back the loan. If there's more equity in the house, then the family keeps the difference. If there's less equity in the house and the house can't pay back the debt, that's what the insurance was for. So, of course, the lender is very, very concerned that that house, one, is going to be insured, because if it burnt to the ground, the lender would have nothing.
If there was no insurance.
If there was no homeowner's insurance.
Okay.
And if the borrower didn't pay their property taxes, just like any home, anywhere in the county, after a couple years of not paying property taxes, guess what? Your property is sold on the courthouse steps for auction. So the lender can't let that happen either. So non-payment of taxes and insurance will call the loan due and payable. So some borrowers get into some trouble, and that's where we've had some changes around the program to make sure that doesn't happen in the future.
Okay. When we come back after the break, I want to talk about if we have a home for $200,000. Let's talk about taking a HECM and a couple of things that can happen, how we can get in trouble, and then go into this new program.
Okay, let's talk about
Folks, I want you to stay with us for the second part of the show, because we're going to talk about something that those of you that have a homeowner's mortgage like this, like we're talking about a HECM, or know someone, this will be something that will be very, very, very beneficial to you. So please stay with us. Stay with us.
Here on 90.3 FM, it's Wednesday. That means it's Joe Steckler Day on Helping Seniors of Brevard. And once again, here's your host, Joe Steckler.
Thank you, John, and welcome back to the second part of the show, folks. You know, there's just a world of things we can talk about, but one of the things I want to just keep reminding everybody that we're on FM 90.3, and this is the difference. We were on AM before, now we're on FM. I have people now calling me and saying that they had been listening for 10 years or more to the show, and they lost us for a year or so, and now they found out we're on an FM channel. So what I simply do is ask them to tell their friends, and we'll try to write more about it, get some more information about it in the newspaper, because it's important, because we'll never build an elder care network unless we have people that want to participate in it. And one of the ways we build that network is to provide information to seniors and people that care for seniors, and bring them on board as sponsors and help us underwrite the cost of this program, like people like Zahn, Beachside Assisted Living, Bill Johnson, elder law attorney, Dr. Sheldon from Solid Bite Dental Implant, Vitas Hospice, Barbara is one of our sponsors, but there are a whole host more, and you need to go to helpingseniorsofbrevard.org. All one word, helpingseniorsofbrevard.org. Find out about what we do and why it's so important. I can give you the information, but like a lot of people, you forget it. It's not something that you are paying particular attention to, but you'll get to a point one day in life that you will need the information. And I can tell you the calls I get are many people that very deeply regret what they have done or failed to do. And one of the reasons I wanted Barbara on the show this morning is because we are getting more calls about reverse mortgages and the whys and wherefores of either having one or not having one. And we got a lot I'm going to jam into the second part of the show. But first, Barbara, let's just say if a person has a $200,000 home, how much of a reverse mortgage could they take on a $200,000 home?
In today's calculations, which come directly from FHA or HUD, right, Housing and Urban Development, the ratio, they call it loan to value, ranges from probably 48% for someone who's 62 years old, so only a small, less than half of its value, and then only upwards probably to about 58-60% for someone much older. So FHA has reduced the actual percentage a borrower can tap into based on the home value.
Okay, let's walk that forward a little bit. Let's say a person gets to be 80 years old, wants to take out a reverse mortgage, and because they don't know how much longer they're going to live, and they would like to go into an assisted living facility, or like to be able to have a better job for planning their future, and they take that $200,000 house that they own, and let's say they can get 50%.
If they're going to go into assisted living, Joe, then what they do is sell that house.
Oh, that's right.
And they would take $200,000 and they would use that money to go into assisted living.
Okay.
Now, if they wanted to live in the house, stay in the house, and have resources
come in and help them,
they could do a reverse mortgage, and they would have access to $100,000.
And if they took that $100,000 and used it wisely and supplemented their Social Security income and maybe a little small thing they had, and they'd have a difference in trying to live on $1,100 or $1,200 a month, they might be able to say, I'm going to be able to live on $2,000 a month.
Well, just like the lady we were talking about earlier, she was living on less than $1,000 a month.
I agree.
With a mortgage payment.
And she could take that house she's owned for 30 years.
Right.
Put a mortgage. I got to talk to her, and I'm going to send her to you. I want you to talk to this lady because she's 64 years old, and we might be able to help her.
Young.
Because she seemed to be pretty smart in what she's trying to do. But let's take this thing a step further, and this is where we're going to get into what we wanted to talk about on the second half of the show that I promised people that they wouldn't know about. Let's say a person they're in their 80s, and they have dementia. And they have a son living with them. The son's been sick. He's had surgery. And they're living on, I think it was $1,400 or $1,500 a month. And they took a reverse mortgage. And the woman had been paying the bills and everything, and as she progressed in her dementia, she was just taking the bills and putting them in a box, filing them. The son did not know what she was doing. This went on for a couple of years, a year plus, and turned out that part of the thing she hadn't paid was the homeowner's insurance.
No.
Remember that? She hadn't paid the insurance. So now she owed something like many thousands of dollars in order if she wanted to stay in a home. So the difference now, she was at the point of being foreclosed on for lack of payment, and she was going to be kicked out of the house. I called you. We talked about it, and you were able to get that lender to reduce the amount of money they owed to $7,000. And we talked to these people, told them what they had to do. We did everything we could do. Time marched on for several weeks, months, and I get an email from Peter Brooks down in Palm Bay. And Peter, I don't know if Peter's listening to the show or not, but Peter's a guy that does a lot of research on the internet. And he called me when he gets something really interesting about veterans or senior citizens or something like that, something the law has changed. He sends it to me. I don't find out all this stuff by myself.
Well, it takes a village, right, Joe?
Yeah.
It takes a village.
Right. And what he did was he sent me this program called Florida Elmore. And so the first thing I did was I made a phone call before I called you because I wanted to find out something. And I asked the person, I said, are you telling me that the federal government will give up to $50,000 free to people to pay back insurance, pay taxes, pay different things to keep somebody in a home? And the woman said yes. And I said, just to make sure, did you say YES? She said, yes, I did, sir. I said, thank you very much. The next thing I did was I called you. And I said, and you said, well, I know a little bit about it, but this thing has sort of slipped by you, it slipped by me, and it slips by a lot of people. It's just like information. It's so important that we know about these things. So how about you explaining to the people, like, we're trying to find this lady's address. Both of us are looking for it because what we found out will keep them in their home if we can find out
if they qualify for it,
right.
And we can sure point them in the right direction.
I'm pretty sure these people will qualify.
Well, what Elmore is, it's called the Florida Hardest Hit Fund Elderly Mortgage Assistance, and it is specifically for borrowers who have done a reverse mortgage and have fallen delinquent on taxes and insurance.
Right.
Lenders, because they don't want a borrower to default for the reason I said before, they need the property to be insured and they need the taxes to be paid. If the borrower isn't going to pay them, the lender will start to force place insurance, and the lender will pay the taxes. But they believe, and as they should, that the borrower owns the money. They owe the money back to the lender. The lender's only putting it out for them for short term.
Right.
So when a borrower falls behind like that, they can reach out to this, and it's a state program. It's put on by the state of Florida. They can go to the state of Florida and apply for these funds. And so it's a process by which they file paperwork. They have to show that there's a legitimate reason that some kind of life event occurred that prevented them from paying the funds, and then Elmore gives them the funds to pay back the lender And you're right. You're right, Joe. They don't have to repay it to Elmore.
They do not have to
It
repay
is
it.
absolutely a forgivable loan. It's a loan for the first year, 12 months, I believe. And then if they don't sell the property or do anything within a period of, I think, a year or two, then the money's forgiven. They don't have to repay it.
And think for a minute what this means, Barbara. We have people that call us all the time and are looking for, quote, affordable housing.
Right.
Now, so many people don't understand what affordable housing is. I had a lady call me yesterday that she had started to apply. She was living in her home, and she knew that the home was going to be sold, and she was going to have to find a place to live. And so she was starting to look at, she had applied at Trinity Towers and found out they had a 2-year wait list. And what Trinity Towers does is they take a certain amount of your income based on HUD requirements that will let you pay an affordable cost for a place that, generally speaking, it's roughly $300 a month. It's about an average cost. And if you look at what we call the affordable housing list in Brevard County, Florida, the average cost of a house to rent like that is $800, $900, or $1,000. And I had a woman call me one time that was paying $1,500 a month rent.
Right.
She was 3 months in arrears, and I said, "How much do you make?" She said, "Well, I get $1,450 a month in Social Security." I said, "Ma'am," "you can't live in a $1,500 a month house." And she said, "Well, I don't want to move." I said, "You can't help it." I said, "What they're going to do is come in there and throw you out on the street." And I said that people are put on the street if they don't pay attention to what they should be doing. I said, you've got to be careful about how you're spending your money. And, I know I never got through to the woman because she's still looking for expensive apartments. But what she wants is somebody in Brevard County, Florida, that's going to subsist her.
That's the problem.
That's not going to happen.
It's sometimes facing the reality of a situation and then being realistic about what your options are.
Right.
And so someone who is in a rental for that kind of rent, she is going to have to face eviction. I mean, that's because any landlord is not going to let someone live there indefinitely with no rent. If you're in your own home and you're falling behind, or you have fallen behind on taxes and insurance, and you've received a notice from your reverse mortgage servicer, and you see that something like this could be imminent, this program is there for you. And Elmore, which is, again, it's called the Hardest Hit Fund, Elderly Mortgage Assistance, for borrowers with delinquency on reverse mortgage, in a reverse mortgage with delinquency on taxes and insurance. And there's a 800 number. It's 800-601-3534. And that number is manned from 9 in the morning till 8 at night, and on Saturdays from 9 to 2. And they are wonderful advisors.
Oh, I agree.
They are wonderful. They'll assess your situation. They'll give you, there's an application you fill out, and then they will start the process. They do say the process can be lengthy, so they really encourage you to communicate with your reverse mortgage servicer so that they are aware of what you're attempting to do. And because it's a state program, different states do have programs like this. They might not be called Elmore, but they're something similar, and it is designed for HECM borrowers specifically.
Well, the states in that program, it said that this program is available in all 67, or in all states.
This is a Florida. It's called the.
In Florida, it's all 67 counties.
Yeah, in all counties.
All
that's
counties,
right. It's
county.
all 67 counties in Florida, right?
Right. But the important thing is, Elmore is designed to keep those people in that home so that it don't become a burden on a community. And so many times we question the fact that we don't have affordable housing available. This is a form of affordable housing.
There is nothing more affordable than being in a home, your home, that your only obligation to stay in your home once you've done a reverse mortgage is to pay your taxes and insurance. And I have sat with folks that really had limited income and maybe got in over their head on credit cards because they were borrowing against credit cards for other issues. And we've sat down and done a budget that looked at selling the house and maybe renting versus staying in the house, and doing a budget and learning how to live off of the monies coming in. And it has every single time proven to be cheaper to stay in the house and knowing that with the reverse mortgage, and I don't think we've said this one time, you are not required to repay a principal or interest mortgage payment the entire time you're living there. You only repay it when the last borrower on title has moved out. And so there's nothing more affordable once you've established this mortgage than staying in the home.
Okay, the people like me just listen to what you just said. How about taking that again and sort of re-explaining what you just said about staying in your home? You don't have to. You can stay. You're not paying anything except your insurance and
taxes.
Property
taxes.
You're going to have to pay taxes anyway.
That's right.
And you can't go live someplace else cheaper because you just can't do it.
Most of the time, if someone goes just out of curiosity to one of our local apartment communities and goes to see what you're going to rent, you can't rent a one-room efficiency for, barely less than $1,000. So if you're used to living in a home and you have you have a home, it's much bigger than an apartment would be, and the cost of a 1 or 2 bedroom apartment is just...
Okay, an interesting thing is that when I read the Elmore application process, the only way you can do this is you have to call that number, you have to talk to one of their counselors.
That's right.
And you have to fill out the paperwork they send you. So if a person says, well, I'm going to go to my attorney, I'm going to do all this and everything else, I guess you could pay the money and go to an attorney, and an attorney could probably help guide you through the process. But I would imagine that 95% of the attorneys don't even know what we're talking about this morning. So who would somebody go to? I know they could go to you.
Absolutely.
But would people like you be the best place to go to get the kind of guidance to make this process work?
I think between working directly with Elmore, because you and I have both spoken with
we did.
that those folks are so helpful. And, of course, I'm right here in the county, and I help people who have a reverse mortgage, have a question. Not that they're necessarily a past client of mine. I'm just here to support anyone in that program. So my phone number is 321-259-7880. And I welcome all calls with any question about a reverse mortgage, and I receive them all the time. Attorneys refer their clients. Attorneys call me when they have a question. So I'm a good resource.
Folks, now I have to admit that I fill a sheet out on every call I get, and I got 3 books at home. One for completed, another was sort of interesting, and one that has to do with tickets for the car raffle that we're trying to do so I can keep track of the people that call me. But I couldn't find the sheet.
I'm still looking for it.
And I called Barbara and I said, you got that sheet? And she says, I'm looking.
I'll find it.
So we're both looking for it, but we know that we talked about whether or not a person would be eligible for a certain reason for this Elmore program. Think about this, folks. A person that has Alzheimer's or early dementia that gets this stuff, it doesn't even really know what it is, files it away. Another person living in a house that had gone through surgery had no idea about the finances or anything. I can't think of a situation that would be more apt to be something that would qualify for a program like this.
Mm-hmm. Yeah, it's very possible. So I'm going to find that gentleman's number and definitely put him together with Elmore.
Yeah, I'm going to be working on an article, Elmore article for my column in Hometown News and Senior Scene magazine, because I think when we talk about information and educating our public on what some of the needs are, just think about so many seniors that, I'm finding out that there is a greater propensity among seniors to have a reverse mortgage than I thought. I wasn't aware that there are so many people out there with them.
Well, I think, Joe, because it's really grown to be not a mortgage of last resort. I think I shared with you a long time ago when I turned 62 years old, I put a reverse mortgage on my home because I am using a feature of the mortgage is a line of credit. And because of the benefits of having a line of credit and what it does, which is unique only to the reverse mortgage, that's my long-term health plan. So I think more and more boomers, and there's a lot of us, moving into retirement when they're starting to realize all the benefits that this product, when we talk about planning, what it can do for me when I'm in my 80s, it makes no sense for me not to do it in my 60s.
Well, we don't have time to go into that what you did, but I think that if you could just give our listeners maybe another minute and a half about what you did and why you did it.
I always say that the mortgage just has so many uses. And so my use was that one of the features of the HECM is that you can create a line of credit, which is basically when we talked about what's the percentage you can get of the value of your house. We said if it's a $200,000 house, we'll give you $100,000. Well, I didn't need $100,000 because I'm still working and I'm not retired yet. But when I turned 62, I put that $100,000 line of credit in place. A unique feature to this mortgage is that line of credit on paper is going to be increasing at a compounding rate of growth. That compounding rate of growth is the same as the mortgage, and it just on paper is growing. It can't be canceled, reduced, or called due like a regular bank line of credit. Right. So my line of credit in my reverse mortgage, when I'm in my mid-80s and I want long-term health care and I want to stay in my house, remember that was the big question. Are you going to stay or are you going to go?
Okay, when you said long-term care, let's make sure people understand. You're talking about people coming in for home care, not long-term care going out into a facility.
Because I couldn't qualify, as a lot of people can't. I couldn't get a long-term health care policy. So what I did was I put that line of credit in place so I can draw on it. So again, my number is 321-259-7880. If anybody wants to know more about Elmore, about managing for their taxes and insurance, questions about the program, you can tell. It's my pleasure. I can talk about this all day long. Give me a call.
I'll reinforce that by saying, the number for our office is 321-473-7770. And if you call me and ask me a question about a HECM, I'm going to tell you to call Barbara McIntyre because I trust what she says. I've over the years I've been doing broadcasting, and this is the 19th year. I've had other people on my radio shows that have talked about reverse mortgages, and Barbara, I will say quite honestly, I've never been able to have somebody on my show that treated the subject with an understanding of the topic that helped other people understand what we were getting themselves into. So that's really important, I think.
Thank you for the compliment.
And we're out of time. All right, I'm going to wind her up here for this day. And folks, we're going to be moving into new offices in June. We think it's going to be in Zahn Beachside facility over on South Patrick Drive on the beach side, and we've already got the largest new quarters of reserved for our organization, and we're really looking forward to it. So if you have a question, do call us at 473-7770, and we'll direct you to the best person who can give you an answer or give you the help that you need. There's a lot of need out there, but we meet that need by having a better access to information and education. So call us at 473-7770. Thank you kindly, and thank you, John, for manning the board. Okay, bye-bye.